All right. Hey, everyone. Welcome back. Today, we're going to do a deep dive into something that's been getting a lot of buzz lately, quality growth investing. It's this idea of finding those companies that have massive growth potential, but, without the roller coaster ride of risk that usually comes with it, right?
Yeah, for sure. It's like everyone wants to find the next big thing,
Mhm.
but how do you actually tell which companies are going to deliver in the long run
Yeah,
and which ones are just, all hype?
exactly. And to help us unpack all of this, we've got some really cool stuff to dig into today. We've got excerpts from this article called Why Adding the Quality Factor to Growth Stocks is a Game Changer. And we're also going to take a close look at a real-world example, the WisdomTree U.S. Quality Growth Fund.
Mhm.
I think it's actually called QGRW, if I remember correctly.
Yep, that's the one. And it's a great example of how this quality growth idea is actually being put into practice.
So essentially, what we're trying to do today is figure out, why does quality even matter when it comes to growth investing? How do you actually spot these companies that have both? And, what can we learn from a fund that's actually doing this successfully?
Yeah, I think one of the best places to start is by understanding why traditional growth investing can sometimes be, well, kind of risky.
Right, like you see these companies with crazy high growth rates, but then all of a sudden, boom, things change, the market shifts, and
Exactly. You're left holding the bag.
ouch.
Yeah, and this article actually makes a really interesting point about this. It talks about how traditional growth metrics, like just looking at sales or subscriber numbers, can sometimes be really misleading.
Okay, so it's like a company can look fantastic on paper.
Yeah, but there might not be anything solid underneath. Like think about Tesla or Spotify.
Oh yeah, good examples.
Both of those companies have huge growth potential,
For sure.
but they've also been
Hmm.
incredibly volatile. And that's because their growth hasn't always been built on the most, rock solid financials.
So it's like they might have a ton of users or a super cool product, but if they're not making money or if their business model isn't sustainable.
Exactly. Then that growth can disappear just as quickly as it came.
So how does this whole quality factor come in to solve this problem?
Well, it's about adding another layer of analysis. Instead of just looking at how fast a company is growing, we're also looking at the quality of that growth.
Hmm.
Like how profitable are they? How efficient are they at managing their resources? Do they have a strong competitive advantage?
So it's like a filter, right? It helps you weed out those companies that might be overvalued or whose growth just isn't sustainable in the long run.
Exactly. And the article actually gives a couple of great examples of companies that have managed to combine growth with strong fundamentals.
Oh, like who?
Well, they mentioned Microsoft and Visa.
Okay, yeah, both of those companies have obviously seen huge growth over the years.
Absolutely.
Yeah.
But they've also maintained really strong financials. Like they're consistently profitable, they have great management teams, and they're really good at adapting to changes in the market.
So it's not just about chasing the next big thing. It's about finding companies that are built to last.
Exactly. And that's where this concept of quality becomes so crucial.
So how do we actually measure this quality thing? Like, is it just a gut feeling, or are there specific things we should be looking for?
Well, the Wisdom Tree document actually gets into the nitty-gritty of this.
Right.
They actually use a bunch of financial metrics to rank companies based on their quality.
Okay, so tell me more about that because I think that's where things start to get really interesting. Like, what kind of metrics are we talking about here?
So on the growth side, they look at things like earnings growth forecasts. They also look at past performance in terms of EBITDA and sales growth.
Okay, before we go any further, can we just do a quick recap on EBITDA for anyone who might not be as familiar with that term?
Sure. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a way to measure a company's core operating profitability. It kind of strips away all those financial shenanigans and gives you a clearer picture of how much cash the company is actually generating from its main business.
So in this context, it helps to evaluate whether a company's growth is actually translating into real profits.
Exactly.
Got it. So they're not just looking at projections, they're also looking at track records. Cool. What about the quality metrics? What are they focusing on there?
So they look at two main things: return on equity, ROE, and return on assets, ROA. And they average those over a 3-year period.
So if a company has high ROE and ROA, that means they're really good at squeezing profits out of their existing resources, right?
Yeah, exactly. It's a sign of efficient management and smart decision making.
And the fact that they look at a 3-year average helps to smooth out any short-term fluctuations. So you're getting a more accurate picture of their overall performance.
Exactly.
This is starting to make a lot of sense. They're not just chasing high-growth companies, they're looking for companies that are growing intelligently and sustainably.
Precisely. And that's what makes this whole approach so cool. It's not just about growth at any cost. It's about finding companies that are built for the long haul.
So let's get into the real-world application of all of this. We've got this WisdomTree U.S. Quality Growth Fund, QGRW. It's like one of the few funds out there that's specifically designed to capture this whole quality growth thing, right?
Right.
So how does it actually work? Like, what are their criteria for choosing companies?
Well, they have this really interesting methodology. They're not just looking for the companies with the highest growth scores or even the highest quality scores. They're looking for companies that rank highly in both areas.
Ah, so it's like finding that sweet spot. Companies that are growing rapidly, but also doing it in a way that's built to last.
Exactly.
Okay, I'm definitely intrigued. So what kind of companies have they actually identified as having this perfect blend of growth and quality?
Well, their top holdings, as of September 30, 2024, might surprise you because they're not exactly obscure companies. We're talking about names like Apple, NVIDIA, Microsoft, and Amazon.
Okay, those are some big names. And we all know them. We interact with them pretty much every day. But what is it about them that makes them stand out in terms of quality growth? Like, what sets them apart from other tech giants or retailers, for example?
That's a great question, and that's exactly what we're going to unpack next. We'll dive into why WisdomTree chose these particular companies and what their performance tells us about how effective this whole quality growth approach really is.
All right, I am ready to dive in. Let's do it. Okay, so we've got these big names, right? Like Apple, NVIDIA, Microsoft, and Amazon. Companies that, honestly, we all know probably use every day. But what is it about these companies specifically that makes them quality growth companies too, like the people over at WisdomTree?
Well, I think the key here is that these aren't just big companies. They're all leaders in their respective sectors. Like we've got tech, consumer discretionary, and communication services represented here. But more importantly, they've all shown like a real knack for innovating, for adapting, and of course, generating those strong returns that investors love.
Right, so it's not just about being a big company, it's about being smart about how you grow,
Yeah,
right?
exactly. It's about not just, sitting back and relying on past success. These companies are always evolving, always looking for the next thing.
And I think a perfect example of that is Apple. I mean, they've managed to create entirely new product categories over and over again. Like, think about the iPod, the iPhone, the iPad. They just completely changed the game each time.
Yeah, and they haven't stopped there. They've moved into services, wearables, all sorts of stuff.
And that's helped them to, like, diversify their revenue and keep that growth going, right?
Exactly.
And it's not just about, like, inventing cool new gadgets. They're also incredibly efficient at managing their whole operation, like their supply chain, their costs. I mean, their profit margins are insane.
Yeah, for sure. That's where the whole quality part really comes in. They're not just growing for the sake of growing. They're doing it in a way that's super profitable. And consistent profitability, that gives them the resources to keep investing, like in research and development, acquiring new companies, staying ahead of the curve.
It's almost like this self-fulfilling prophecy. Growth leads to quality, and quality leads to more growth.
Yeah, exactly. And we see similar patterns with those other companies in the fund's top holdings too.
Like NVIDIA.
Yeah, like NVIDIA.
Yeah.
They've basically become the powerhouse in gaming and data centers with their GPUs.
Right, right.
And then you've got Microsoft. They've totally nailed this transition to a cloud-based model with Azure.
Which has become a massive source of growth for them, for sure.
Absolutely. And then there's Amazon. I mean, they pretty much revolutionized both e-commerce and cloud computing with AWS.
It's amazing to see how these companies, even though they're in completely different industries, they all share that same DNA, that innovation, efficiency, and that ability to adapt.
And that's what makes this whole approach so interesting. It's not tied to one specific industry or anything. It's this philosophy that you can use across the board to find those companies that are really built for long-term success.
So how does this WisdomTree fund actually perform compared to, like, other funds or benchmarks? Does this focus on quality growth actually translate into, real results?
Well, the document we have says that the WisdomTree U.S. Quality Growth Fund has consistently beaten both the S&P 500 and the Russell 1000 Growth Index, both in terms of profitability and growth.
Okay, so they're not just talking the talk, they're walking the walk too.
Exactly. Of course, past performance doesn't guarantee future results or anything.
Right, of course.
But it definitely suggests that this approach has some merit. It shows that focusing on those companies with both high growth and high quality can be a pretty solid strategy.
So if I'm an investor and I'm looking for something with like the potential for good returns without too much risk, this quality growth approach is worth checking out.
Yeah, I think it's definitely worth exploring.
Awesome. But before we go any further into specific investment advice, which I know we can't do on this show, I think it's important to zoom out for a second and talk about the bigger picture. Like we've been deep in the weeds here talking about this specific fund and all the details. But I want to bring it back to this core concept of quality growth. Like, why should our listeners even care about this?
That's a really good point. And I think what's so powerful about this idea of quality growth is that it goes way beyond just investing. It's really more of a mindset, a way of looking at the world.
I love that. It's not just about picking stocks, it's about making choices. Choices that lead to, real sustainable success and happiness in all areas of life.
Exactly. Whether you're starting a business, building a career, or even just working on your personal relationships, those principles of quality growth can be super valuable.
It's about choosing substance over hype, making decisions that are aligned with your values, and always striving to improve, to evolve.
Yeah, it's about playing the long game, not just chasing those quick wins or fleeting moments of satisfaction.
That's a really powerful message. But before we wrap up completely, I want to make sure we recap the main takeaways from today's deep dive. We've covered a lot of ground. Okay, so just to recap everything we've talked about. We started off by, questioning this whole idea of just chasing growth and investing. Like, we talked about how companies can have this, junky growth, where the numbers look amazing at first glance, but underneath it all, there's not really much substance.
Right, it's like a house of cards.
Exactly. And that's where this idea of quality growth comes in. It's about finding those companies that are not just growing quickly, but they're doing it in a way that's sustainable, that's actually profitable.
Yeah, and we talked about how Microsoft and Visa are great examples of this. They've both seen massive growth over the years, but they've also managed to keep those financials strong. So they're less risky, less volatile compared to those companies that are just focused on growing as fast as possible.
Right, they're built on a solid foundation.
Yeah.
Okay, and then we dove into the WisdomTree U.S. Quality Growth Fund, the QGRW. And that's, one of the few funds that's specifically designed to capture this quality growth effect. And their methodology is really interesting because they combine these growth metrics and quality metrics.
Yeah, so they're not just looking for the companies that are growing the fastest or the companies that have the highest quality scores. They're looking for the ones that excel in both areas.
Right, like the best of both worlds. And their top holdings include, some pretty familiar names, right?
Yeah, we're talking about Apple, NVIDIA, Microsoft, Amazon.
And we talk about what makes those companies so special. It's their ability to innovate, to adapt to change, and to consistently, make money.
Yeah, they're not just chasing fads. They're building businesses that are meant to last.
And the fund's performance seems to show that this whole approach is working.
Yeah, they've outperformed the S&P 500 and the Russell 1000 Growth Index.
So there's some evidence here that this focus on quality growth can really lead to better returns.
But I think what's even more fascinating is that this idea goes beyond just investing,
Oh, yeah, for sure.
It's a mindset.
It's a way of life almost.
Exactly. It's about applying those same principles, whether you're building a business, pursuing a career, or even just working on your relationships.
It's about prioritizing substance over hype. It's about making decisions that are in line with your values.
And it's about constantly striving to be better.
It's about playing the long game. Right.
Exactly.
I think that's a really great point to end on. It's a reminder that real success isn't just about how fast you're moving. It's about where you're going and how you're getting there. So, to all of you listening out there, think about how you can apply this idea of quality growth to your own lives. What areas could benefit from a more, thoughtful long-term approach? What choices can you make today that will set you up for success in the years to come?
Yeah, it's something to think about.
And we hope this deep dive has given you some food for thought, some inspiration to, keep learning, keep growing, and keep exploring.
Absolutely.
Thanks for tuning in, everyone.
Yeah.
And we'll catch you next time.